So we have 3 winners from Prosperity here today who are going to discuss how they were able to outsmart competition from across the world. And to moderate this discussion, we'll have Deb Nandi. Deb is an options quantitative researcher, and he's the creator and the moderator of the Prosperity Algo Round Challenges. Deb joined IMC Chicago in 2020 and moved to IMC Mumbai in 2024. Deb did his BTech from IIT Bombay in 2014? Yeah, in 2014. And he then did his MS from Carnegie Mellon and worked as a quant in Goldman Sachs before coming into IMC. So I'd hand it over to Deb, but before that I'd like to invite Anant, Rishi and Siddharth as well onto the stage, please. A round of applause.
Thank you very much, Mani. Welcome all of you. You have been through a couple of hours of introduction about IMC, a lot of teams, and the main focus of bringing you guys here and the winners, of course, is to discuss Prosperity. Some of you might already know about Prosperity and might have also participated in them. And today is the discussion that we will have a little in depth about Prosperity. And of course, we have the winners who are not only the India winners, but they're also the global winners. So this year we had approximately 10,000 teams participating across the globe in Prosperity 3, which is a huge achievement for the challenges that we have put together. So I was part of Prosperity 2 last year, and we did something new. We introduced some new challenges. This year we went a little step ahead of that and introduced a little more nuanced into the challenges. So we'll discuss a little about that. So to start off, Prosperity is a trading challenge. It has 2 sections. One is a manual round, and then there is an algo trading round. So in the manual round, so each of these, both of these have 5 rounds each, and each round lasts for 3 days. So it's a total of 15 days of the challenge, and in each round, some new manual questions are proposed, and some new algorithm challenges are also shared. So the theme of the manual rounds is essentially you have a static problem or a puzzle, which is usually from probability, statistics, logical reasoning, a little bit of game theory, and you have 3 days to sort of find out answer to those questions. The algo round, however, asks you to build a Python script which will trade systematically to trade a certain kind of product. We will discuss a little more about what those products are, but the products could be trading any volatile instrument or a mean reverting instrument or instruments which have trending nature. It could also be basket of products and their constituents, so how to trade them together. This year we introduced short-term options, how to trade short-term options and hedge in the underlying. You also have a statistical arbitrage product that you could trade in multiple exchanges. You have 2 exchanges for the same product. How do you find alpha while trading those 2 products simultaneously? So that's the summary of the Prosperity Algo challenges that we had last year and some of the manual challenges. So, and we have the winners for those challenges. So I'll jump onto the questions to start off. The first set of questions will be around the idea of how to perform in a competition like Prosperity. And after that first set of questions, we'll dig deep into the exact challenges themselves and what ideas the winners came up with. So the first set of questions I have is more along the lines of what kind of skill sets do you guys think should a winning team have? What diversification of skill sets, or what did you find that, yes, this kind of a skill is what is needed to solve the challenge that we encountered, and we need somebody in our team who can help us solve that, right? Because of course you can't have all quants or all traders or all programmers to have a winning team, right? So go ahead, and what thoughts do you have in your mind?
Hi, I guess I'm audible. Yeah, so The way we thought about how to structure our team is that some of the people are better at, let's say, programming, and they are the ones who are developing some tools for the other people to use. So we started off a month before the trading started, and our team members were basically building a lot of tools. Like you could directly submit from the command line, and you could, let's say, you could hyperparameterize, like find the optimal parameters for your strategy and do a bunch of other stuffs. So development was certainly very important. Everyone needs to know how to write in Python at least. And apart from that, you need someone who is basically monitoring, who is seeing that your hyperparameters are tuned not in a way that it overfits, or someone who looks at the order book and looks at like each thing and make sure that things works nicely. And if you talk about in terms of skill set, I think like you need to know some basic modeling. So some basic statistics helps, like regression and stuff. You need to know probability, I guess basic suffices. And yeah, Python I said, and some critical thinking, I guess.
Would you say that all of your team members had all the skills necessary, or some of you had expertise on certain areas of skill sets and they were taking the calls or calling the shots around certain areas, or you all were having the same level of expertise and you were discussing among themselves?
So I believe we were fortunate enough to have like different team members having different set of skill sets, because some members were better at developing those command line tools, and maybe some members had a better intuition of, let's say, options to develop strategy around that. Some other team members were more curious, they would look at your trades and backtest it for a very long time. Some team member would suggest what kind of tools would make us more efficient and all. So.
Cool, great, thank you. I also received the feedback that, in Discord, that each round was, the 3-day for each round was not sufficient. So by the third day, everybody would say that we cannot do this in these 3 days. We are scrambling for time, we need more time. And in Prosperity 2, we had increased time for certain rounds, but in Prosperity 3, we did not. So how did you guys prepare for the time scrambles? And were you aware of it, or did you guys prepare for it? How much time did you guys put together in each of these 3-day rounds? What was your mindset in that crazy days?
So all our teammates, we had decided that we have to go all in. So you can't make any excuses that I've got classes or you need to sleep or anything like that. I know it's funny, but that's how it has to be. And also the person who would submit the final code, that person has to sleep for at least 2 or 3 hours. So yeah, that's really important, because you don't want someone who is sleep deprived to submit a random thing, right?
Yeah, you can't go without sleep for 15 days straight. That's what he's saying.
Yeah, I guess Rishi will answer the rest.
Yeah, so the only time we were able to rest properly was after the submission and before the Discord starts ringing up again that we have the next round coming. So we just wake up again and start looking up on the data. And time is definitely much more precious this time, because last time I guess there were half the number of assets, and this time there were like lot of more assets, more baskets, then more options, and just more additional complexity to the challenge. So it was hard, but I would say if you walk for a long time on a problem, you it just keeps running on in your mind, even when you walk going to have your food and so on. So you keep on thinking. So we kept on discussing about those things, and it helped really lot to come up with ideas, maybe with better execution and stuff like that. And yeah, definitely whenever someone needs to submit the code, we would just tell him that you sleep for this time and we will work on the code, and then he will verify everything and submit it. Yeah.
You want to say something? You want to add something? You want to add something to it?
I think whatever they said completes all of what I had in my mind to say about. I mean, what else? What I can add maybe is that maybe you'll have to sacrifice everything else just to get to this result, and maybe you'll have to maybe. Oh, okay. Can you hear me?
Yeah.
Yeah. Okay.
Yeah, and then basically you'll have to keep on thinking about the problem. I mean, whatever is, even in the class, like you'll have to sit down and do the problems and all of that. Yeah.
Yeah, you don't get to the top team in the entire globe for nothing. You have to sacrifice something. And I would also like to remind that, being part of a trading company, one doesn't just have to think about how to implement things or what ideas. Execution is extremely important. And I'm pretty sure that was not the first version of your script that gave you the winning numbers. Must be like, I don't know, 100th version of your code. So a lot of grinding goes behind it. So another question that I have, I mentioned about the Discord channel where I received all these questions. How was it for you guys to use the Discord channels? Did you guys find it useful, interesting? I know there was a lot of distractions as well, a lot of people trying to sort of manipulate or play with the emotions, I guess, right? But at the same time, there were moderators trying to guide you in the right directions and help you out. So how was your experience using the Discord channel? How to stay away from the false narratives, but at the same time, stay on track?
So I would take that. So in the Discord, the two-person who will follow every time and who gives accurate information is Dev sir himself and Jacek. So these both persons were the most helpful ones in the entire Discord. They came up with hints and helps throughout the challenge. And there were other participants as well who like posted about their crazy PNLs on Backtester, and also someone modified the website to like show the crazy charts. But whenever we saw something, some PNL chart which we saw believable, we tried to like reverse engineer that at what times did he trade, or at how did he trade, if we can like get some info from there. And it was especially helpful last year when there was orchards. So there we started seeing like the PNL go frenzy, and like it was like giving crazy numbers. So we were able to reverse engineer like what strategies were going on there. And similarly this year also it helped quite a lot when we genuinely saw someone posting about genuine signals, and we were able to identify it. But yeah, there was like a lot of noise as well in that. So we were like prepared for that from last year. So we were able to handle it better.
Yeah, cool, nice. I mean, from my experience, I have seen very interesting thing coming out of the Discord community. There was this user with the user ID Jasper, and he put together a open source backtester that IMC did not provide. IMC just provided the data. Here's the problem statement, go figure strategies. And this Jasper user from Prosperity 2, I think, he built this backtester, which would allow you to sort of get PNL, upload data, upload your scripts. At the same time, he built a tracker to see that, okay, between rounds, which teams have performed better, how much incremental PNL have they made, how much have they lost. So all of that, which has been super useful for the entire community. So this was a really good experience for me to see that, okay, people stepping up and contributing to open source ideas to make the experience much better. But at the same time, as he was mentioning, our challenge wasn't also sort of immune to the deep fakes or the fake PNLs, because some of them I knew that, yes, this was fake, but I don't want to sort of give away any alphas, neither in a positive way nor in a negative way. I want everybody to sort of figure out themselves, okay, what to use, what not to use. Yeah. Cool, great. And so this was the sort of general set of questions that I wanted to ask them, because you will encounter these sort of challenges in your actual participation. However, the next set of questions that I'm going to discuss is specific to Prosperity 3 challenges themselves. Perhaps there will be new challenges for next year, so it won't immediately be useful, but the ideas remain the same, because yeah, trading at the end of the day is very simple, right? So, buy low, sell high, of course. So yeah, so let's dive into the question. Before I go to the algo trading rounds, I would like to hear your thoughts about the manual rounds, right? How much effort did you guys put in? What did you find about the difficulty level? anything that you had knowledge from previous Prosperity 2 participation that helped? What would you say about those rounds?
Well, I guess let's go over each round. So round 1, I think, was pretty easy. You could brute force and find the solution. Round 2, we tried to do what we did last year. We tried to get a bunch of folks, a bunch of our friends, and basically ask them what would they choose. So as a representation, but it kind of didn't work well this time. Last year it worked great. And yeah, so manual, those 2 things we did bad. For the fish round, I think we did very well because we knew that some bots are going to spam and we knew that the bids are going to go down. So that was very good. And for the last one, I think, yeah, the previous 2 Prosperity, you could kind of map each of the questions to the previous 2 Prosperity and know what's your kind of expected movement in the underlying. And from that, we simulated some some Monte Carlo simulations to know how should you take your position. You don't take over position yourself, take too much variance and stuff like that. We actually did very well in the last round, and yeah, we did.
So there were a couple of rounds where we had a treasure hunt sort of map where there were multipliers of which cells would you choose, and there were other players also involved. So what he was saying about that, we created our own Google form in our college and asked our juniors and seniors and batchmates to fill it up so that we can get some good real world data, and which we believed was quite close to what we are seeing in the actual with the participants, and we offered the top 5 positions of orange candy. So it was pretty much fun, and then on top of it we did some analysis of which cells would be best and not to choose them because everyone would choose them, and choose a second cluster of cells and the top one for the second cluster of cells, and it would give you good result. And for the reservation price, whatever he said was exactly what we did. Just one thing that we also tried to incorporate the human psychology, if you get a number say 285 or something, so you have a tendency to round it off to the nearest even number or maybe something like that. So we tried to incorporate some aspect of the human psychology, and that gave us the exact reservation prices which were the average of the participants. So that was really cool that we made a lot of seashells from there.
Cool. Yeah, very nice game theoretical aspects to sort of collect the population ideas, because yeah, that gives you the idea of to what depth people try to think. As you said, some participants might just take the best value in front. Some would think at least one layer inside that, okay, they are thinking about the best, maybe I go for the second best. Some would go third best. You can keep on going. But in reality, human beings don't really go that far into the depth. So that sampling was a nice way to figure out to what depth do people usually think about and go towards, right? So that's nice. So let's jump on the to the algo trading questions, which is most interesting bit, I would say. So this year we introduced this new product called Squid Ink on round 1. In round 1, you usually have 3 tradable products. Usually you have 2 tradable products, but this year we introduced the third one called Squid Ink. And that one was supposed to be very volatile, going extremely crazy, and very large moves and swings. And it was actually inspired from something that when I came from Chicago to Mumbai, I was seeing this product, and this tradable was having extremely crazy swings. And my project was to build some strategy to sort of monetize this large swings. And of course, we were able to monetize them at some point. And so I figured that, okay, why not put it into a tradable and see how Prosperity participants take it up. And yeah, I have seen some crazy sort of comments and questions, that frustrations from the community that, you cannot monetize this product. This is just beyond monetization. But of course, you guys, I would like to hear your thoughts that how did you, or if you were able to monetize the product at all, and if yes, then how did you go about it?
So I think I was able to monetize it. What I tried to do initially was I was trying to go through the chart which was there, and there were two things which were very obvious to after just seeing it. There were some spikes which were extremely large, which were extremely unexpected, and then there were some spikes which were gradually growing. On average, what I was able to get out of it was that the large spikes often reverted back to the fair value which was there previously. Other than that, whenever you had a slowly growing spike, that was, I guess, not tradable that much. So what I came up with in the solution was that I used EMA mean reversion trading and a Bollinger Band strategy, which allowed me to when there was a huge spike which was unexpected, short it, and then the other way around too. So that's what helped me.
Yeah. Anything else to add?
We initially, whatever we were trying on kelp and resin, like market making and then position balancing, all those things. So we thought that if we could just apply that and it would work, but that was not the case. And also there was some sort of noise which was added by IMC in the tropical TV video that there is some pattern in squid ink, which we tried finding out for quite some time, but we didn't. And then finally we realized, and also Dev sir said in one of his hints, that market making was not a good idea in this product, because whenever you market make, you either hold some position and then the price moves adversely and you lose a lot of money there. So our idea was to just use similar to what he said, Bollinger Band type, and taking advantage of the jumps, if we can detect them, and then we took a position according to it, and when it reverted we made some profit. And it's not that we didn't use limit orders, but that was mostly to offload our position, and we tried to always maintain a position very much almost zero for most of the time, because it was highly volatile and risky in that sense.
Yeah, no, that was also similar experience of mine when I was trading that product, that yes, the product is extremely volatile, so carrying portfolio or position could be risky. So you have to sort of always stay very lean and nearly flat, and once you see a nice opportunity, you really jump in with a large volume, right? So that was Squid Ink. The second sort of set of challenges was is something that we had in Prosperity 2. It was basket trading. So most of you must have heard about ETFs, or exchange traded funds. So these funds are nothing but a combination of underlying assets put together into one particular basket, as I like to call it. And we had something similar in Prosperity, where you had products that you could trade themselves, and you have a constituent-based basket that you could also trade. So sometimes these baskets would not be aligned with their fair valuation, and it's a pretty straightforward way to trade them. But of course, to monetize the every ounce of money that you could is something that where the skill lies, right? So were you able to monetize completely and every bit of P&L that you could have got from this product? What was your thought process, ideas behind it?
So I would take it. I was primarily working on baskets when it came. So from last year of Prosperity, we had a lot of experience of how to trade ETFs, the baskets and the constituents. So we were the idea was clear. We would be performing statistical arb on the spread between the constituents and the basket. But what was interesting this year was there were two baskets. So there were three sort of deviations which we can look at. That is the deviation between the two baskets, or the baskets and their corresponding constituents. So what we thought were trying out all this, and later we realized that it is better that we just try to look at the spread between the constituents and the baskets, and not between the baskets, because we also had to hedge our positions correctly using the constituents. So what we did was usually we see people focus on just selling and buying the maximum quantity they can. So our strategy was slightly different. We tried to take position gradually. We also controlled the volume which we are trading. If the spread is the gap is lower, we took a lower quantity. If the gap is larger, we expect it to revert quicker and faster. So we took a larger amount. We had a quadratic like to model this like amount of quantity which we should take. And also we had bands on top and the bottom where like you go up, like you hold some position, you start losing it. Then when you cross the upper band, you start taking a position, and then when you come down, then you in between you just hold it. Otherwise, you will be losing a lot in the spread. And then when you go down, you start like offloading again, and then again in the lower band you start taking up again. So this sort of strategy like helped us a lot, and it like made great like PNLs in that asset. And for the constituents, like there was a mental dilemma of whether to hedge like the exposure of the baskets. From last year's prosperity, we had experience of both like hedging our exposure, like making it neutral, or like what we coined as anti-hedge. Like it's like basically a lead-lag relationship, if there is any, that if the constituents move, the basket will move in the same direction. We like tried out both in last year, and we thought that we would stick to like solid like fundamentals of trading, and we won't be taking any of that risk trying to go something like anti-hedge. And so we properly like adjusted our position and harmonized all these deviations properly, and that made us like a great strategy at the end.
No, the sizing is a very interesting idea. We call it, or the industry calls it a leaf-based sizing model, where imagine you have a certain edge and you want to size according to that edge. And you know that that edge is going to sort of mean revert towards 0. So let's say the edge value is at, I don't know, +5, and you build a position of 100. As the edge starts to realize back to, let's say, +2, or even let's say it goes to +4 from +5. If you completely give out of your 100 position entirely, you haven't really fully monetized that 100 that you picked up, right? So you wait until a certain amount of edge has been realized. And once it has realized, then you start exiting the position. So if you start imagining the plot, how it would look like of your sizing with respect to edge, you would climb up your sizing as the edge goes up, as you said. If the edge is large, if the divergence is large, I would like to trade more. So as the edge goes up, you trade more. As the edge comes back, you do not trace the same path back. You rather trace a different path back, which acquires some amount of edge along the way. And that looks like a leaf. So it's a very sort of standard, or it's a well-researched idea to have this leaf trading. And so in Chicago, I had an intern, and we were working on this project, and we had a leaf-based sizing already in place. And then she recommended a different style. She had even more aggressive way of holding, and that looked like, the leaf usually matches at the top. She had an idea which doesn't really meet at the top. It would have a gap at the top, and that looked like a horn. So she was like, I'm going to call it a horn model of sizing. So there are different kinds of models around sizing. So it's very interesting to sort of see that they have figured it out and then they put it together. So these things really make a difference between the first and the second team. Cool. So the third set of question I have is, of course, from the round 3. Which is the short-term options trading. So in Prosperity 2, I introduced trading options, but I started with something long-term options trading because I wasn't sure how folks will take it, if they find it too complex, too difficult. So I added a 1-year out option, right? And that 1-year out option just have some delta, doesn't have any interesting behavior because everybody enjoys 0 DTEs, right? Everybody enjoys the options which are just expiring tomorrow. Just gamble yourself out of it. And everybody was saying, this is not really an option trading. In last year, Prosperity 2, they were saying, this is just regular 2 products, just happens to be correlated. I'm not getting any fun out of it. So this year I was like, okay, let's add some fun. Let's introduce a 1-week out option. So I introduced a 1-week out option which starts from the day of the round 0. So by the time they have round 5, that option will have like 2 days left to expiry, and there will be some amount of interesting juice to find out. And yeah, I mean, the product that the options were built off was also not a not a vanilla product. It was a very volatile underlying that was moving. Not as much as Squid Ink, but it was moving a lot. And I'll tell you a little anecdote about that product. But before going to that anecdote, I'd like to ask you guys, what did you find? How did you find this options trading? And did you enjoy? The Discord was saying there are like 5 or 6 different ways of making money from options trading. How many ways of making money did you find? And did you implement all of them?
So I guess a lot of things that was said on Discord didn't work out, and we did try all of that. Yeah, what was helpful was the hint which was dropped by you on IMC's website. So we basically
Try my best.
Yes. So we took that plot and we sort of tried to, the obvious idea was you regress the curve, the moneyness versus IV, and you try to basically, short options which are above it and like long options which are below it and hedge your delta, but obviously that doesn't work because the entire trading day, the curve was basically below what the curve you regressed, okay? So you would essentially go short, okay? So that doesn't make money. So instead of that, what you could observe is that the 10,000 option, which was like the at the money option, it had a very interesting feature. Once you translate option prices to implied volatilities, what you will see that it usually would fluctuate around a band. That would mean like, for example, if your underlying moves, let's say 10 points, then you expect your ATM to move 5 points. If it moves, let's say 3 points or 7 points, then you know it's overpriced or underpriced, or it was overpriced or underpriced, and you had to trade that. So the initial idea was to basically, take a band around those implied volatility, take your option position, hedge away your delta. But what we saw that we were making money, but not as much as we could. And the reason was that the spread was taking a lot of our P&L, right? So we thought to actually like hold some delta, and we thought about like not fully hedging our deltas. So instead what we thought like let's keep our quantities low and make sure to offload as soon as possible. And for the underlying, we then came up with another strategy. So an interesting thing about like the way we think about financial instrument is that it, like a heavyweight instrument, it usually trades around certain bigger means and fluctuates around like with smaller means around them. So what I would mean, like let's say it fluctuates around 20 with a let's say deviation of 2, and then it would let's say go to 30, and then like deviate with a deviation of 1, things like that. So we tried to capitalize on that. We made EMA bands. We also had to make sure, because this had a very interesting feature, that there were certain jumps in the instrument. So there were like 2-3 jumps, and we had to make sure that we don't hold a lot of delta position at any moment of time. Now the in the money options, we basically thought like, okay, so the underlying and in the money options were basically looking like identical, and that's because the extrinsic value was pretty low. So we tried to buy below intrinsic value, but it didn't work, And I think we couldn't really figure out of the money options. We did make PNL, but we weren't sure like if we are just riding the variance or actually having an edge. And yeah, I mean, there were a lot of position sizing. You had to make sure that you don't tune your parameters by software. You have to manually do it so that you make sure that when there's a regime shift, like going from one bigger mean to another mean, that you don't just take a large position against the direction of the market. So yeah.
Anything else to add?
We did try things like gamma scalping, and like we tried to monitor our deltas and vegas. Didn't work.
Okay, yeah, it's not that easy to make money from options, but it's definitely a very interesting set of products. The Discord community was also talking about gamma scalping, and I found it very interesting that, okay, they identified something, and as usual, I was very sort of, it was quite fun to see that the usual thing that you observe in the actual markets, where people just buy some deep out of the money calls or just sell them thinking that, I'm just going to make some quick money, gamble my way out of it, and they're going to have options give you huge leverage. And I was seeing people were doing that. And it was very fun to watch that they were actually trading in Prosperity, not as a market maker, but just to trade these options out. Did you guys see that as well from the Discord discussions?
Yeah, I think even one of the top teams, they basically just shorted every option possible, and that brought them to rank 2. So it was funny. I think another reason we couldn't really figure out of the money options is because of a small spread, like in the terms of dollar value or Seychelles value, actually translates to a huge difference in the IV value. So you need to have like a lot of edge to be actually, like take from the market maker and like do well in the OTM.
Yeah. So let me ask you guys this. When we launched this round 3 options trading, a lot of the complaints from the Discord channel was, it's too short of a period to learn options theory. Options theory is a very complex set of theories. You can't expect us to just learn everything about options theory and start trading and making money in 3 days, right? So how much would you say was your prior knowledge in options trading or options theory or pricing them? And how much would you say that you picked it up throughout the competition?
I would say like from Prosperity 2, we had a lot of learning, like the Black-Scholes model and all those things. We also like learned about implied volatility and stuff, which we also explored after Prosperity 2. And he also had a lot of idea in trading options. So he had some background which would help us get started. I would say it is definitely needed that you have some idea about options, like especially implied volatility, gamma, and delta and all those things, because those are kind of the bread and butter of like options trading. And he can maybe elaborate a bit further.
So honestly, I think you need to know not to like find the right strategy, but to like eliminate all the incorrect directions you can spend your time on. Obviously, like there was some IMC masterclass video on options dropped like last year. So I think like that helped us understand about these smiles and skew structures. Also, like having a basic idea of Black-Scholes and how prices translate to IV is certainly very helpful. And knowing that basically like just the basic ideas like intrinsic value, extrinsic values, as expiry comes closer, your your extrinsic value goes down, and like if there's an anticipation of more volatility in the underlying, like how that would move. And yeah, I guess those things were pretty you need to have a basic intuition, I would say. Like I don't think none of us can like derive Black-Scholes on pen and paper. So that's the thing. And I guess I'm missing something, but
maybe it will come back. But yeah, I mean, I do think a little bit of background in Black-Scholes theory and options theory is useful. But at the same time, if you are putting in 24 hours without sleeping for 3 days straight, there are tons of resources out there. Of course, IMC Masterclass is one of them, but there are much more and many more such ideas. And with such a enriched open source community like the likes of Jasper, which is giving out backtesters and everything, I'm pretty sure there were folks sharing some easy to learn or quick to learn options theory open source resources for you to pick it up. So, and of course there are more than just options theory ideas in trading. Perhaps in Prosperity 4 or 5, I'll try to sort of bring them back and see, and always keep you guys on your toes, right? The anecdote that I was talking about is, he mentioned about gamma. So essentially, if you purchase an option, which is very close to expiry, that has a certain delta, right? When we say delta, how much does the option price move as the underlying moves, yeah? So imagine the underlying is this HDFC Bank, which is trading at 2,000 rupees, and you have a option at strike 2,200. And that has a delta of, let's say, 0.3 or 0.4. Essentially, if HDFC Bank moves by 10 rupees, the option price would move by 3 rupees or 4 rupees. That's the delta. The gamma is how fast does this delta itself move as the option price as the underlying price moves. So as the underlying price moves, this delta from 0.3 could become 0.31, 0.32, 0.35, and that actually accentuates the P&L that you could make on your underlying moves. So imagine if you're long gamma. So you bought the option, and the underlying moves by $2. You make straight up money, $2 times the delta, that's your money. But this gamma effect gives you a, what do you call, a sort of a squared terms, or a, so gamma times the change in the underlying squared is the additional P&L that you could receive. And that essentially really amplifies the P&L that you could make from long gamma, right? You can imagine underlying moves by $10, and gamma is, let's say, I don't know, 1,000, you are immediately 1,000 times 100K up, right? And with that comes short gamma. So imagine you are short gamma, you sold these options. Just like the top two, the second guy, selling all the options around, right? So you sold the options, and the underlying moves by $10, and you lose 100K, right? So the anecdote was, at the very first round, so we gave 3 days worth of test data for them to figure out. And on the actual training day, the testing day, there was a gap move on the underlying. I was telling you that it's not as volatile as Squid Ink, but it's somewhat volatile. And it had a gap move by, like, I don't know, $100 or something. And everybody lost their mind. In the Discord channel, everybody lost their mind. And I was in Mumbai, and the round finishes up, I don't know, at one time. I think it was over the weekend as well, or it was late at night. And I come in the morning, I get messages from my co-moderators that, okay, what's going on? Folks are complaining that this is going down, something's wrong. And I come back, and I'm like, oh my God, these guys, they are such a short gamma, and they're saying that something is wrong. So I had to put together a sort of analysis around it. And I didn't really share that. I started asking in the Discord that, okay, who among you will help me do some analysis? And there were like 3-4 guys who were like, yes, let's do it. And they were generous enough to do it because they put their actual work aside in the prosperity, and they were working with me to sort of answer this question. And I asked them that, okay, you know what, bring up your previous data that I shared with you, find the moments when you see these large gaps. Are they very frequent or are they not? And then started looking into it. Then they saw that, yeah, there are quite frequent moves. And then I asked them, would it make sense to hedge your deltas if you do not hedge your gamma and whatnot? So along the way, they figured out with the analysis that, yes, shorting gamma is not a very prudent idea, that too overnight. And by the end of it, they were satisfied that, yes, everything was going all right. And that was more of an example to the entire Discord community as to how the likes of quants or traders would do a certain analysis at desk. Oftentimes, we will see that we have experienced a drawdown intraday. I don't know, we lose 20K. And our task would be to understand what went wrong. We would dig in, we will find ideas, we'll find moments, okay, something went wrong. If it's within our control of our systems that we could fix, we will find solutions then. But the first step of analysis should not be, okay, how do I fix it? That's not how, at least, a quant mind works. The first question should be, what went wrong, or what happened? Once you explain the drawdown, then you can think of, okay, was it in the purview of our systems to improve? Was it something that the market always does, in which case we have to prepare ourselves? So all these needs to be understood properly. And I think it was fun exercise for the participants to do with me. And did you guys experience that? Or did you guys were wise enough to figure out that, you know, I'm not going to go short gamma, things can go wrong?
Like we actually took some time to figure that out. One time we lost money due to that, and the other time we made money due to that. So we realized that it is sort of very risky to do that. So in the final rounds, we were prepared to see a lot of teams maybe gamble their way. Like it could just bring them to the top or just put them to the down. So we tried to manage that risk to at least not lose money doing that. Otherwise, it would be difficult to climb to the top.
Cool, great. I'll quickly go to the last question that I have. It's about the round number 4, which is the statistical arbitrage. Essentially, in Chicago, I heard that there's going to be another exchange, but we currently have 18 or 19 exchanges where the exact same options product is traded. And as a market maker, we would have to trade across all these 19 exchanges, the same product Yeah. So I try to bring in that flavor in Prosperity 2 itself. That okay, you know what? You have an exchange. This product is being traded over there. It's very liquid. But then here is your exchange. The product is not super liquid here because you have to transport it out. You have to, it's like commodities product, like let's say oil. And you have to put it in, and you have import tariffs and export tariffs. So all that frictions are in place. And how about you sort of find a way to sort of trade in your exchange? That was the idea. And I tried to sort of bring in some form of predictiveness using different kinds of alphas, like sugar prices for this prosperity. I think it was sunlight index for the previous year's prosperity. So yeah, tell me about your experience with that. And was there any interesting alphas that you found, and did you put it to good use?
So basically, what I initially, like, it was quite obvious after reading the problem statement that I'll have to do arbitrage over the exchanges, and the import and export tariffs and all of those things were included in the edge. So basically, I always shorted the local, I sold the things in the local bid if it was greater than the implied ask and the edge, and the other way around. And the other thing which you are talking about, the sunlight and sugar thing, I was trying to do some correlation analysis around that and trying to find out a way to do that. But I mean, I was not able to get very close to what I was wanting to do. So I did not go through it because I did not want to gamble anything. So I was pretty happy with what I was doing.
It was actually like from our experience from last year's prosperity from orchards, that we knew that this sort of gap, this arbitrage arrives when the import tariffs go very low, and in fact they were negative there, which was something to look at. But for some new participant, it would be really difficult to figure it out from the first 1K iterations because it didn't had that arbitrage opportunity. Although like in the historical data, this opportunity was there. So from last year, we knew that this was something important we should try. So we put the arbitrage condition on both the direction, like selling and buying, and if it is like beneficial, like if the ARB condition holds, and then next time we convert it and we realize that profit from the ARB. So from the signal perspective, we were in the last year we were able to predict humidity for sunlight for 500 timestamps ahead, but we knew that it had something, but we couldn't figure it out. So this year it was slightly more clearer because the sunlight was going like this, and then we know that if we know the first few timestamps, you can just forecast for the further timestamps how the sunlight will behave. And we figured out that the critical index of where this macron prices will go up or low is around 50 or 55. So we forecasted that if the sunlight in the archipelago is forecasted to go beyond this index within in the next coming 500 timestamps, then the prices will go down and go up, and we were able to figure out the signal. Although I would say that it was not a very good signal, but it had some decent predictive power. We incorporated it with our ARB code, and it was better than simply doing ARB. But for sugar prices, it was difficult, and we couldn't we saw some high correlation points but couldn't forecast them, so we couldn't find out how it could be used to trade macrons.
Another interesting point that they have probably missed is that we were looking at something that we coined as hidden liquidity. So basically, if you look at bid and ask, and there are some price level between them. So if you quote exactly like you undercut by one, you may not get any market orders. But if you try to undercut by more, then there might be some market participants that are basically filling your order book, your orders. So what you try to do is you basically try to go around and try to figure out what's the best place you need to quote to kind of attract market orders. And I think that really helped in our maximizing our arbitrage. Along with that, we kind of position size. So we would allocate a certain inventory to the market, like this arbitrage part, and another part of inventory for like our position taking based on the sunlight signal and all.
Cool, so interesting. So they had inventory or risk limits assigned to position taking strategies and risk limits assigned to two-sided market making. So it's quite sophisticated, I would say. On the point of having predictive ideas, so last year the predictive sort of feed that I had, it was not that straightforward. It needed to be figured out. And that's where a lot of people didn't figure out in Prosperity 2. So I was like, this year I have to make people figure it out. So I'm like given much more direct and straightforward way of figuring out alpha. But even then, I think not everybody was able to sort of make the complete juice out of it. Maybe because it's one of the final rounds and they were already sleep deprived by more than a week. Maybe because of that. So maybe we'll give it extra time this time onwards. But you can also find real life correlations with such scenarios, because imagine like the OPEC, which is producing oil, and a lot of hedge funds monitor their output in terms of barrels, how many barrels are they producing, and the impact it could have on oil prices. And then any news that can potentially disrupt the oil production would have an impact on the oil price. And something similar was done in our manual rounds in round 5, where we would have these news article paper which would have different products, and some news articles that, oh, you know, this thing happened, or this snowstorm happened in this product, so this particular gear became super busy or super in demand. So those news-based ideas was part of the manual trading. Perhaps I can think of something in the algo trading that something all of a sudden shows up. But if I don't inform it ahead of time, it's going to make some difficulties. Everyone's going to complain. That's why I try to put it in these sort of oil prices or sugar prices, which would impact your actual production of the commodities we're trading. So yeah, that's all the questions I had to discuss with them.
Thanks to Deb for that exhaustive panel session, and thanks to Anant, Rishi, and Siddharth for all your elaborate answers. I'm sure next year many of them are going to go back to this video to understand what it takes to be, you know, a champion team, and not only that, but also how to form a champion team. So there was a lot of strategy behind that as well. I'm sure many of them here have taken notes and probably will revisit this video when we put it up in YouTube sometime down the line. Okay, up next is what we've come here for, to felicitate these champions today. And for that, I'd like to invite Jyoti, our Head of Human Resources, Jake, whom you all met an hour back, and of course, Emmanuel again. Please, Jyoti, Jake, Emmanuel, if you could come up. Yeah. So before we give the prizes, I'd like to make a... so first up, we'd like to felicitate Siddharth. Siddharth, if you could come up, I'd request Jyoti to hand over the trophy. Jyoti, you can come to the center. Yeah. Yeah. That's okay. That's not all. I'd request Jake to give a hamper. And then Emmanuel to give the check. You can all see what the prize money is. Pretty handsome, especially if you're a single member team. Emmanuel, hold it from the side. Yeah. Thank you. Now for the winning team. You finished 11th in the last edition, right? Yeah, so Prosperity has the rule that if you finish in the top 10, you're not eligible for the prizes the next year. Thankfully, they finished 11th last year because they came back to absolutely crush it this season. You were leading from what, round 2, round 3? Round 1, yeah. So never ever look back. I mean, there were moments where there were some ups and downs, but I think Team Heisenberg, I think all Breaking Bad fans here, even Siddhartha, Team M Lab, I'm not saying what M is. But yeah, Team Heisenberg was Sajid. Sajid is not with us here today because he's in Europe. We have Rishi and Anant. Anant, of course, I think you're a Prosperity veteran right now. We have 3 editions and you've been part of all 3. So yeah, I'd like to invite you both to the stage and Jyoti to hand over your trophies, Emmanuel for your check and Jake for your hamper. So yeah, these are crystal trophies in line with the prosperity theme. There's more. Yeah, stop. I think we're taking good photographs as well. Yeah. Jyoti, you want to give Jake a hand? Yeah, I'm pretty sure. I mean, figuring out logistics to take it back home is on you guys. And then your hefty prize money check. Jake, you can also come into the frame, please. Yeah, one for the photographers. Yeah, I think with this, we are coming to the close of the event. We are open for refreshments, drinks and snacks. But the winners, we'd like some more photos with you, your celebrities. So we are going to pap you for more photos right now. But thank you. One final request. If you like the experience here today, please do write about it on LinkedIn. I'd reach out to all of you and give you some good photographs tomorrow. The team is open for networking. Everyone's here. You can see IIT Bombay alumni and IIT Madras alumni wearing name tags. Easy for you to break the ice. Thank you all for coming, on your summer break. Some of you have flown down from different cities. We really appreciate that. And we hope you've had a great time. Thank you.